Hello fellow chartists, welcome to my YouTube channel. I am the Chartist, and today we had another volatile day for the S&P 500. Bulls and bears, in theory, should have made some profits today. You never know. Maybe they didn't, but we had a strong move to the downside. We have some strong move to the upside, which we're going to talk about. But first, flow sentiment is still bearish, guys. Not as bad as yesterday, not as one-sided. 57% for puts, 43% for calls. I can add my filters. Something I like to do. I like to look at premiums of 200,000 or more. Go back, and then I'll look for out the money because they're more aggressive. And yeah, 65% for puts. And you see here towards the end of the day, the big money were going for puts. Okay, now these aren't in the millions or anything. These are six figures. The highest one's about 610,000, but they are pretty aggressive plays. Okay, got 425 strike, 410, 416 here. This one's in the money or at the money. It's a little out the money. Yeah, it's a little out the money. It's a few cents, whatever. This one right here, 435, a little out the money at the time because they entered around 435.92. Yeah, so most of the big monies are going to puts, but it's not as bad as yesterday. We can also look at VIX. So we're seeing a lot of calls based on my filters, $200,000 worth of premium or more and out the money. Towards the end of the day, this one's after 4 o'clock right here, 37.5. You've seen them repeated strikes for 37.5. Okay, they entered around 27. This one is crazy. February $50 strike. All right, these are all in March though. Keep in mind they're all in March. All right, so we've seen a lot of calls coming in. I mean, 50-50 overall for puts and calls for VIX, but towards the end of the day, the calls just came on running. Okay, so let's take a look at the chart. We're looking at a 15 minutes. All right. The day started around here. This is 9:30. A lot of lines, right? 9:30. Okay, so we go to my Discord that I like to talk about all the time. My plan was to use 432 to 433 zone as the equilibrium level for bear/bull. So above 433, I was bullish. Below 432, I was bearish. Okay, so I had a price target if I was bullish for 442 first. I was hoping to get a retest of the 200-day moving average, but there was other levels we had to go through first before getting to that. We didn't get to it, by the way, but we had a 437.5, which I updated my members later. But anyways, if that zone failed, meaning below 432, I would have switched to bearish, and we would sell to 428 first, and then my next price target below 428, I thought we would get a new low of 415 to 416. So 428 held. So we look at this is a 15-minute chart. So right here, this is 9:30. Okay, so if we followed the plan, right at market open, it dropped below the 432 level and dropped all the way down. The low of this candle is around 428.38, and the next candle had a low of 427.15. Okay, so off just in the first half an hour of trading, we should have been profitable if we followed the plan. Okay, now you can see it on this 15-minute chart. Okay, you notice this blue line right here. This is my blue support line that connects the, I think is the November 2020 low to the January 2021 low. Okay, so I was using this as support level, and you see here that we lost it. This was January 24th, yesterday. Later in that same day, we recaptured it. You see it test it and go up. Okay, now you see the more intricate details on the 15-minute chart. We go to a 1-hour chart. You see here that we lost the blue support level that's now resistant, recaptured it, and look what happened today. We came and retested it as a support. This is a perfect recapture of that level, which I updated my group about based on the 1-hour chart. I was looking at the 1 hour chart. And I noticed, hey, we retested that level. It's a good recapture. So the plan was, which, you know, I updated the group about, below 428, or the exact number was 427.7. Below it, this is a failed recapture, and I would switch to bearish, which aligned with my support levels and all that happy stuff. Down to yesterday's low, which was 421 to 420.7, and I think we're gonna get a new low. All right, but it ended up holding, and it went all the way up. I had a 437.5 price target. We hit it. As long as that level hold, 442 would have been the next price target. Okay, it would have been the next price target, because I was thinking, notice how we have a Fibonacci level here, 442, and also that happens to be with the 200-day moving average. So I thought we would get a back test today. We did not. We got cut short of it. 437.5 was supposed to be support and hold. It did not hold, and it dropped all the way back down. So now the plan pretty much is the same. We got to watch that 432 to 433 zone. That's going to be our support level. Below it, I'm going to use it as an equilibrium again. Below it, I am bearish. For tomorrow's support will be 428 again. 428.2 to be exact. Okay. Above it, I would be more bullish. Okay, we'll play it level by level. All right, there's some resistance here at 435.7. And then above it, we'll put 438 and then 442. Okay, so that's pretty much gonna be my plan for tomorrow, is to use that zone again as an equilibrium level. Okay, so keep in mind, below 432, I'm bearish to the next support level, and below that is a big drop. Okay, to the previous day's low, and I think we are going to get a new low, possibly down to 414 to 416 zone around there. All right, and then if that doesn't hold, then down to 406, where I would think would be a good buying level. All right, so that's my opinion on the price action so far. That's my plan for tomorrow so far, and of course, I'm giving you guys my plan based on the price action right now. You know, SPY can gap up tomorrow, SPY can gap down. You know, that's why I believe my Discord would be a great idea. But if you don't join my Discord, and just remember this, no matter where the SPY opens, always identify the support and the resistance. So if SPY does open below 428 tomorrow, so let's say it open around 425 or something, so obviously support would be, we have a 424 level right here, and of course yesterday's low around 420.7, and then resistance would be 428. Okay, so just always identify your support and resistance and use those levels as reference. Okay, the strategy is simple. It's not easy, but it's simple. If you're bullish, you go long at support, you play it from support to resistant. If you're bearish, you want to short at resistant, and you play it from resistant to support. Okay, one of my strategies that I also like to do, I buy breakouts of resistance. If we get a breakout of a resistant, I buy it. Okay, if we get a breakdown of a support, if we lose a support level, I will short it. Okay, that's my strategy. All right, play it level to level. If we take a look at the VIX, you'll notice the VIX is still above the upper Bollinger Band, and the RSI is still pretty overbought. So the VIX is literally defying gravity. Despite having a red candle right here, it is still an update from the previous day, and it's still pretty overextended to the upside. So when that happens, I like to look at smaller time frames to see the smaller moves, what's happening. And I was watching this support level, well, the support trend line for this yellow one that start, that's what, January 20th. Had another touch here on January 24th. And then it tested here today around noontime. okay? And then of course, when we saw the breakdown right here, I alerted the group, hey, VIX is losing a critical support level, an intraday critical support level. It's looking bearish. So you know a bearish VIX is a bullish SPY, all right? So this drop happened around noontime, which also happens to be around noontime when the SPY started jumping. Right here, you can see that on 1 o'clock, noon to 1 o'clock. So noon to 1 o'clock right here, noon to 1 o'clock. So cool. So pretty much VIX looks like, I mean, based on the intraday, the 1 hour chart, VIX look like it's going to start basing soon and try to like cool down a bit, which would be healthy. All right, because it's, like I said, it's defying gravity right now above the upper Bollinger Band. RSI is extremely overbought, needs to cool down, and we'll see. If the VIX cool down, we'll see if the SPY will cool down a bit before it's, you know, because it's been pretty volatile lately, all right? So yeah, so going back to the daily chart, the SPY, I do want to mention that this is an inside day candle, all right? So the way you would trade an inside day candle, you would wait for the break of the range of the previous day's candle. This is what they call the mother candle. This is the child's candle because it's within the range of the previous day's candle, so they'll call it the mother candle. So the high of the mother candle is 440.3 and the low is 420.76. Okay, so that's pretty long range. Okay, but generally, when you have this trade setup, you know, if it breaks the high of the mother candle, so SPY gets above 440.38, you will bet to the upside. If SPY breaks 420.76, you will bet to the downside. Okay, now that strategy is based off the inside day candle strategy. Definitely look it up, but that is definitely a setup. I'll play it level to level either way, but just wanted to mention that that was a setup. Okay, taking a look at Triple Q. Triple Q closed below the lower Bollinger Band, so still overextended to the downside. It came down and tested that 341.5 support level. Okay, got very close to testing it, as you can see. All right, it tested the 351.6 resistant. Pretty much just played ping pong between that level. Okay, also has an inside day candle setup. All right, so it's pretty overextended to the downside, especially pretty far from the 5-day moving average. So definitely keep an eye on the 5-day moving average to see if the Triple Q will test it. All right, I won't think short-term bullish, at least for a relief rally. I feel more comfortable entering something like that for Triple Q if I can see it break above the 5-day moving average. All right, so we do have something. We do have like this level right here, something like that. So a relief rally, in theory, would help or allow us to go and retest this yellow falling trend line right here. Okay, so we'll see. I feel more comfortable if it gets above the 5-day moving average, which is currently at 355.66. All right, so it's a long ways away. It's probably going to move down tomorrow, so definitely keep an eye on that. If you don't have it in your chart setup, I definitely recommend using it if you want to trade like the chartist, that is. And yeah, usually a rejection from there is bearish. But if we can break above and close above it, that's a sign of bullish sign. Right now, we're just seeing just bearishness. Okay, there's not much I can say. But yeah, support right now is at 341.5. So below that, we have 338 below, and then 334, which was yesterday's low. And below 334, as you can see, I'm going to have to add more support levels. All right, but if you check what I like to do, sorry about that. What I like to do in situations like that is possibly look at a previous low that showed us some demand. So we had a previous low right here around 328. So 334 is lost, possibly 328. We'll definitely update you guys on it tomorrow in the next video. But yeah, I'm bearish on the Triple Q unless we can close back above the 5-day moving average and show some bullish momentum for a relief rally. Right now, not much relief going on. Dow Jones, and this is what I'm talking about with the 5-day moving average. You see how the Dow Jones tested the 5-day moving average? Okay, that's the power of the 5-day moving average. Because in a strong bull market, you see a lot of bounces off the 5-day moving average. Okay, a lot of bounces off the 5-day moving average. And then when in a strong bear trend, you see a lot of rejections from the 5-day moving average. You know, so that's showing us signs of just bearish price action. Despite being a green candle, it's still a down day from yesterday. Tested the 5-day moving average and treated that as a resistance, which is a bearish warning. So either way, it closed at 342.9. So we got support at 342.8. So if that's lost, obviously 340.5 is next, and 338. Okay, and it's possible we'll go down to a new low. All right, so if yesterday's low was around 331, I think we can go down lower. Okay, so yeah, I won't be bullish, just like with the QQQ. I won't be bullish on this, or favor some type of relief rally, maybe back test this 200-day moving average, which we never got to do. Not unless we can get back above the 5-day moving average, which is currently at 345.3. Either way, play it level by level. IWM, here's another one. Tested the 5-day moving average, which is also where the 200.93 Fibonacci level was. Treated as a resistance. We recaptured it yesterday. Obviously, it was a false recaptured. All right, and then it just played ping pong with the next support level, 195.79. and close in the middle. It's not as overextended to the downside now, because now it's at least within the lower Bollinger Band. So we'll see if we get more basing. Okay, I would be more bullish on IWM if it can get back above 200.93 to put 209 in play. Okay, that's a pretty big move for a call or whatever or a swing trade, whatever, or day trade, whatever happens. Okay, I'm just saying that's a good move. It's a nice move, $9 move. Okay, but while we're below it, I would look to I'll be bearish and look to short instead. Okay, yesterday's low was at 191.23. So I think we go to a new low. If we can't get some closes above 200.93, I think we'll get to a new low down to 187, possibly 181. All right, Tesla, had a nice trade with Tesla today. Actually alerted in Discord. I don't just cover the SPY, we cover other things as well. So basically, we saw some calls, some big money coming in for calls on Tesla. This is where we like to combine the options flow with the technical analysis. Okay, so we got some good weeklies, not a lot of 950 strike prices with calls and some big money going in. So I said, okay, took a look at the chart. At the time, there was resistance at 927.7. Okay, so we pretty much alerted it. If we can break that resistance, that will put 950 plus in play. It broke that resistance intraday. You can look at a 15-minute chart. Around there, that's when it broke. Went all the way up as high as 951. So technically still 950 plus. Okay, so price targets is where we take profit. So that was a good trade with Tesla. But yeah, back to the analysis. At the end of the day, it closed below that 927.7. It didn't hold it, so it's still looking bearish. Okay, if we get back above 927.7, that puts 950 to 963 in play again. Okay, but keep in mind that we did have some minor gaps, so today could have been just a gap fill and then probably head down lower. Okay, next support isn't until 886. And the support below that is around 853, which was a previous low. But I think we could, just like with the other one, we could break below that and possibly hit a critical level, support level around 830. Okay, and that's his white support line right there. Been a support level since May of 2021. Got a few touches, as you can see. Oops. So let's see if we will get, that would be the 1, 2, 3. If it tests it again, that would be the 4th touch, okay? And I would definitely look to go long at that level, but you still got to respect your stop loss. All right, guys? So that's what I got for you guys today. I hope you found some value in this video. And if you did, please subscribe, hit the like button. And thank you guys for listening to me. Listening to me. This means a lot. Helping my making my dream come true. Can't do it without you guys. And talk to you soon.